Good morning, everybody. Thank you for joining me here today. Unfortunately, I would have loved to meet everybody in person here this morning. But first and foremost, want to give a hat tip to the team over at BizTimes and Magic Productions. This has all gone extremely well here so far this morning. And frankly, I think it's another fantastic example of a small business being really nimble and agile and creative in a way to deliver their content or their product to their clientele. So it's been a fantastic and very smooth morning here so far. I hope everybody enjoyed the commentary from Greg and Tim. Those are two A-listers in the Milwaukee area, so I really enjoyed learning a little bit more about their processes, what they've been going through here, and the histories of their companies. So I think what we're going to plan on doing here today is we have about 20 minutes in order to share some information with you with regards to how we help our families that we work with, specifically those families that are that own closely held businesses, plan for the transition into retirement, into new ownership, whether that's to other family members, employees, private equity, strategic buyers, whatever it may be. So normally there's a full deck that we would go through here that talks about that transition. But what we're going to do a little bit differently today is spend some time on, now that circumstances have changed, what can we do to reassess where that plan is and get it back on track? So a little bit different of a curveball here, but I think obviously with the circumstances that we've all been going through over the last couple of months, things have changed. But what you want to do for the rest of your life after you retire and are no longer operating your business on a day-to-day basis, those things have not changed. So what can we do to get us headed back in the right direction? First and foremost, a little bit of an introduction about me, as well as a little bit about our team at Morgan Stanley. So my name is Jeff Krause. I'm a certified private wealth advisor, as well as a certified financial planner and a financial advisor with the Riverwood Wealth Management Group at Morgan Stanley. Our office is located just on the other side of Gerke's Corners in Waukesha. The main landmark we always reference is we're right behind that Oscar's Frozen Custard off of Moreland Road. The Riverwood Wealth Management Group is 6 financial advisors. I think cumulatively we have about 110 years of experience working in financial services. We have 4 full-time staff members who are solely dedicated to the support of our clients, as well as the operation and administration of their accounts. The advisors on the team range in age and gender, which I think has been one reason why our business has grown here so rapidly over the past couple of years. Is we have advisors, both male and female, as well as partners who are in their 60s, 50s, 40s, and 30s. I think that's important because the advisors who are helping you incept the plans that you would be discussing at the point of your retirement are also going to be the advisors who are there helping you execute in the future, as well as helping your kids and grandkids with their finances when the times are appropriate as well. So we really have 2 practices, I'd say, within our business. One is a traditional retirement planning practice in which we're helping folks, the average investor who's accumulated their nest eggs through saving in 401ks or other employer-sponsored retirement plans. They're going to be relying on pensions or Social Security in order to meet some of their retirement expenses and distributions from their accounts to cover the rest. But then really, again, where most of our growth has come from over the last couple of years is helping families who own businesses. And what we've done is designed what's really more of a multi-family office feel, in that we help our families who own these businesses prepare for their transactions, transition through, and then really handle everything financially for them after the transaction takes place. So I think this is a little bit of a differentiator for us in that we bring world-class investment management to the table through Morgan Stanley's platform, but at the same time, we bring some family office type resources that are not normally associated with investment managers. So in this day and age, asset
Good morning, this is Maynard. How may I help you?
Oh, we had somebody pop in there. Maynard, if you could put yourself on mute.
I'm sorry, with COVID, I'm not able to help you. You have a good day. Please don't.
All right. Sorry about that. So In this day and age, we think it's really important, if you're working with investment managers, to ask yourself if just simply the asset allocations and tweaking of managers here and there is all that you should be expecting from your financial advisors. Truly, we think a more holistic approach, one in which we're helping you with planning and then with day-to-day finances, along with investment management after that, is something that you should be expecting from the teams that you're working with. So let's dive into the presentation here today. So, excuse me for 1 second too while I get my timer going here. So first, we're going to talk a little bit about the planning process in general. So what it's been our experience when we're introduced to business owners who are going through a transition is oftentimes we're brought in 6 weeks, 8 weeks, 3 months before some type of transition is going to take place. And although we can accelerate and put the pedal to the metal and get some planning done between now and then, there's a lot of opportunities to save specifically on the tax ramifications of these transitions if we're allowed to get in the situation earlier than that. Preferably a year or two before the sale process, maybe when you're engaging with investment bankers and M&A attorneys even begins. So important to remember that. And again, since it's been our experience that we're brought in really close to the deadline, most folks don't have this plan in place. So we're going to spend a little bit of time talking about that because, if your circumstances have changed, but there's no plan in the first place, the first step is to create that plan. After that, we'll talk a little bit about ways that we can get back on track with regards to the financial plan. And then after that, we'll kick it into some question and answers. Now, normally, these are very conversational breakouts at these events. This is our second year sponsoring this, and as is in most presentations, the best content is usually through a question and answer session, whether it's after the event after the presentation or during it. So if you have any questions during the presentation, just let me know, and I'd be happy to stop and address those again, because I think that's where most of the good information comes from. So what is a plan? Again, so as of May of 2020, USA did a study of small and middle-sized business owners and asked them how many of them have a formal succession plan. And this is just a succession plan, not even necessarily a private wealth management plan to help them guide or go through what life is going to look like after this transition takes place. And less than half of people even had a plan or put thought into what life is going to look like after this transaction takes place. So I think, taking the time to actually think about what life is going to look like in the future, it puts you significantly ahead of the game when compared to the rest of your peers, if you're the one who happens to own and operate a family-owned business. Or if you're another professional who works with those folks, I think a lot of value can be added by, trying to impress how important it is to work with a team of advisors on the private wealth side of things while you're going through this transition. And it's understandable. I'm sure there's folks that are in this presentation that have gone through the process of transition. Even just the day-to-day operation of a business obviously is going to take the majority of your time and effort and emotions and equity. And so it's understandable that thinking about what life looks like outside of the business isn't a top priority for folks. But again, if you do go through that process, it can save you not just a lot of time, but I think even or money. But most importantly, it can put your mind at ease. Because if we have this plan in place and we know based on how we run it, that you are going to be in good shape to achieve your objectives and your goals, even if there is some variability maybe with the dollar amount that you get for your business, or if your business decreases by 20 or 30% and you can't take as many distributions over the next couple of years, knowing that those types of stress tests are built into your plan can really put your mind at ease and help you sleep a little bit better at night and maybe focus on getting the business and the day-to-day operations and revenue, sales, and earnings back on track, as opposed to how is this going to affect me and my family. So there's really 3 stages to business success.
Click on that.
The first is going to be the pre-planning. And again, this is where rarely we have seen an opportunity to be involved, but in a perfect world, it's where we should really start to talk about what life is going to look like after this transition. And so that's 1 year before the actual year of your transition. We work really closely with Ann and Corey over at the Toro Group, and in conversations with them, they've mentioned that the sale process can take anywhere from 9 to 12 months in order to, sorry here, getting a little bit of feedback, 9 to 12 months in order to complete. So we would like to be involved, or I think the planning process for how your family is going to be affected after this transition takes place should really start about a year or two before that. So how do we get going with that? First, you want to build a team of advisors, right? And it's very important that you work with folks that that have the experience in taking other families through this particular transition and that you trust. I think when choosing advisors, it's kind of the 30-second field test. You sit down across the table from somebody and say, okay, I think this is someone that I'll be able to work with, or this is someone that I don't think I'd like to help me through this process. So this team is going to be comprised of your investment bankers, your M&A attorneys, your CPA, and then your estate planning attorneys. Now, I think we're a little bit of a differentiator when compared with our peers, is your investment managers or your financial advisors often are not really playing much part in the pre-planning of the transition of the business. However, we take the reins and try to coordinate of as much of this communication as we possibly can between you and the rest of your advisors. I think one thing that we do really, really well is take some complex, whether it's estate planning strategies, whether it's investment management strategies, whether it's strategies you can do to maximize the value of your business before a transaction takes place. We can take these very complicated, kind of specific to our niche and business types strategies and things that we're talking about and explain them in a way that I think is easier to understand. So building a team is going to be the first step that you'd like to do to help usher you through this process. After that, it's kind of a lot of work on you and your family's end, to be honest with you. It really starts with a conversation, and it starts with, what do we want our life to look like after we are no longer running this business on a day-to-day basis? I mean, we just, you listened to Tim Michaels earlier today, and if it is not family that's taking over, there's a lot of different conversations that you have to have about the future of your business and then the future of your life. And so those conversations need to be had with your loved ones. Is this going to be a scenario in which we're going to be trying to sustain our lifestyle? Do we want to increase our lifestyle and spend more? Should we be making major purchases before this transaction? Should we wait until after? The future and what you want it to look like for you is going to drive the planning process. Oftentimes we get the question, do I have enough money and really to retire? And the answer to that question is, well, what do you want retirement to look like for you? So putting pen to paper on quantitatively on what you think you're going to be spending and then qualitatively what you want to be able to do after you retire is going to be very important. The next thing is to address concerns. And I think this is something, these are difficult conversations to have. No business is perfect, and unfortunately, no family is going to be perfect as well. I have a colleague out of Chicago who was a sell-side investment banker before he became a financial advisor, and he always tells the story that as an investment banker, he would sit down with a business owner and ask what was his major concern, and the business owner would say, I want to maximize the value of this transaction, or I want to reduce my tax liability in this transaction as much as I can. When he puts a different hat on and goes in as the private wealth advisor, the main concern that the business owner has is, how is this wealth going to affect my kids? I have 3 children, 2 are doing really well. 1 is a bit of a spendthrift and really hasn't found his purpose in life yet. I'm really not comfortable with this particular child inheriting a large sum of money at this point or really in the future. So what can we do to plan around that? So really we talk about the positive things and the negative things, and then we work in order to construct different strategies around that. So the first, before we enter into the year of that transaction, we are really talking more about conversations, really and what qualitatively what life is going to look like in the future. Then we enter into the year of the transaction or transition, and that's when we can really start doing the blocking and tackling financial planning strategies, trust and estate freeze strategies. So is there any trusts and gifting that should take place in order to reduce the amount of your taxable estate and take advantage of your estate and gift tax exemptions? Tax minimization strategies in the year of the transaction. Are there any organizations or entities that you would like to give gifts to? A large charitable contribution in the year of a large gain can help offset that gain. Is there any accelerated gifting you want to do? There's strategies where you can put 5 years worth of 529 contributions into an account in one particular year and take that entire write-off on your Wisconsin state income tax return. Do you want to establish a donor advised fund? We can do accelerated gifting in that. Do you own your building? Is the building a part of the transaction? There's ways that we can exchange that building so that you don't have to pay tax all the way down to $0 that you've depreciated out of the building at the time of the transaction. And then, family governance and discussions about what this money is going to look like for you and your family going forward. Who's going to take what roles and what is it going to mean that maybe that the business is no longer being operated by you and your loved ones. Finally, we have the post-engagement, or what life looks like in the future. And so this is when, after the transaction takes place over a couple of different years, we set into really helping you with every facet of your financial life. So that's our family office model, in which we're helping you with very basic, simple things such as your cash management, bill pay, check writing, debit cards, FTS transfers, wire transfers. Our staff handles all of that for you. Investment management, of course, your asset allocation, making sure that your combination of investments, both public and private, are created in a way to help you achieve the return that you need to achieve your goals while trying to take as little risk as possible. Continuing to monitor on a quarterly basis the progress of your plan and the progress of you achieving your goals and seeing if we need to make any changes. Insurance reviews, that's both life insurance and property and casualty insurance, and making sure you have the coverage that you need. Trust services, we have a third-party platform of different trust companies across the country, which we vet for you. If in case in some of that trust and estate planning, you do need a corporate trustee. Banking and lending, Morgan Stanley has a private bank in which you and your family members can access mortgage lending, lines of credit, commercial lending, and different types of loans. Then finally, lifestyle advisory, which is really Morgan Stanley has a very nice platform of partnerships with other luxury brands and services that our clients can access these other luxury brands at discounted prices. So that's really what the entire plan looks like from a few years before the transition, through the transition, and into the future. But what happens if we've been working together for a couple of years and the plan of attack was to transition out of your business in April of this year? And hopefully there's nobody on the call that was planning on doing that. But unfortunately, there were a lot of folks across the country that had either retired in January or were planning on a transition out of their job or a transition out of their ownership. And really, functionally, retirement planning, whether you are an employee or an owner or whatever it may be, the spending that you want to do is going to be indexed to your nest egg. So with that being the case, if the nest egg decreases, then unfortunately we have to have that conversation. So looks like we're going to end here in a couple of seconds, probably to get back on track. What we can do here quickly is just say this. We will need to review the plan, revisit your goals, look at your objectives and your concerns. Are the inputs the same or have things changed? Has your timing changed? Are you going to push your sale out or are you going to push your retirement out? Reassess the results. We provide all of our family statistical probabilities of being able to do and achieve their different objectives in different bull base and bear case cases going forward. Do you still have a high probability of success? Yes, if you do, then we're able to continue with the plan in place. No, then we need to reevaluate some of those inputs that we talked about before. And then we react.